Hello, everyone. Welcome to the CUBE Pod, episode 112. I'm John Furrier with Dave Vellante. I'm in the New York Stock Exchange. Dave, salute to you. You're in
Hello, sir. How you doing?
You were just here. We're doing a lot more content this week at the Crypto Trailblazers, mixture of experts. We're also planning for the AI Factory series kicking off September 22nd. Of course, we were at the US Open tennis. Well, what a fun week it's been. Tuesday after Labor Day, short week, tons of news. The White House tech crew was there. Zuckerberg, the all-in guys were there. Chamath, David Sachs. You had no Jason, although he was freelancing on Fox News, loving Trump. We'll get to that in a second. But
the seating arrangements were interesting, right? Zuck right next to him. Tim Cook was across the table. No, Jensen. No, Jensen said,
yeah,
I heard that Jensen said, I prefer to be one-on-one so I can have a bigger influence. The only guy that doesn't have to go. And of course, Musk probably wasn't invited.
Yeah. Wild day today in the options. A lot of red on the board, Dave.
Broadcom, well, the big green today. Holy cow. Can you imagine if it was an up day?
Dude, it was up 16 last night after hours, 318. What did it close at today? Or where's it at right now?
Up 9.5% right now, last I checked.
Top 10 is shareholder value.
It's Matt up 9.4%. That's up 29 points. Awesome.
Sarjeet had a thing on Twitter X. He said, hey, they beat him like, yeah, beast and shareholder value creation. Matt Baker says, yeah, and a kind of a combination of PE firm too, a little dig there on Broadcom, but performance has been phenomenal. Nvidia and Broadcom, two companies. All my friends love me because I told them 2 years, buy Broadcom and Nvidia, you're going to do well. And they are very happy.
Yeah, that was a good call.
Phenomenal. Of course, we got that right again. Another check on the box for the CUBE research and CUBE action. But Dave, US Open, let's start with the US Open because that was a fun day. IBM.
Amazing. Tell people what we did. Well, let me tell them. So we were invited by IBM. Thank you, IBM. I got my US Open hoodie on. Beautiful. We were invited to actually play on center court at Arthur Ashe. Us, John, Dave, and about 10 other people were invited to play. It's like 8 o'clock in the morning. And we had a coach. Her name was Tracy Austin, two-time winner of the US Open. She won it when she was 16 years old. And she played Chrissy Everett, and she beat Martina. She beat Chrissy. I mean, legend. She was awesome. And, we thought, John, right, that it was just going to be a little glad handing. We weren't even sure if we were going to be taking showers. We brought stuff just in case. Man, she had us running around for an hour and a half. She had us playing games. She was coaching us, training us. We were sweating. We were competitive. It was amazing just being on center court. Timed our serves. It was really an incredible experience. So thank you, IBM. And then we went up and watched some unbelievable tennis. We watched some of the women. We watched Alcaraz play. And it was just what a great experience that was. And it was such a pleasure being out there with you, John. I got some great photos with you. I hope the guys pick them up. You didn't get any photos of me. I was crushing the ball, but you got some really good shots in. We got shots of you, me, and Tracy. We got a shot of Alcaraz. It was great.
I was concentrating every muscle in my body not to hit it into the net.
That was beautiful. That was so good.
It was interesting too. I mean, we had a meeting the following day. I don't know if you recognize, but Jim Cramer was going up the escalator while we were coming. Waved to us, fellow.
I said hi to him. Hey, Jim.
Two captains in the night, saying hello to each other. He was going in for the Arvin interview. Arvin was on Mad Money last night. Obviously, we had the briefing with IBM. Their business, I mean, just the energy at IBM right now, from a company standpoint. Bruno just got promoted. Bruno Aziza. He's got a new role. He won't reveal what it is, but apparently I heard from the Neo4j guys. He used to work with them at Google. It's a promotion, but IBM is just continuing to defy the cultural gravity that was once the old IBM. And they're turning it around. Arvin is turning it around. So, he wants to build a great business and he's doing it. And we'll continue to watch the earnings, but, Red Hat, HashiCorp, they're making the right product moves with Watson X. And of course, they got the big money they spend on the brand marketing. US Open, 30-year relationship. The analytics this year, much better than last year. They've made some real-time updates to the analytics in tennis. I was watching the Carlos Alcaraz sequence that you filmed when you wanted to get the sequence. Turned out to be the best of the day, by the way. I'm like, wow, you've got money shot there. I went inside to grab some sunscreen, and on the Watson X program, you could see where all the balls were hit. They got real-time position in the court, just much better than last year. So IBM is up their game big time on that. And so I just, hats off to IBM. So
I sat through the customer presentation. They get customers in the box and they're going to give them a little Kool-Aid injection. And I have some notes. It was pretty cool. My observation, IBM won't like this. They've turned the US Open into an AI data factory. I mean, that's really what it is. They don't use that marketing. That's kind of Dell and Nvidia, but it really is a data factory. You talked about 30 years. I took some notes when I was in there. They've got over 100 years of match data. So they got all the history on like where the balls land. They got the note I have here is 4.5 million data points per match, and it's unbelievable. So they've instrumented. I had never been to Flushing Meadows. They've instrumented 17 courts. And John, you've been there before, but just anybody who's not been there, you walk around, it's like tennis courts everywhere. It's amazing.
It's a party.
3 billion digital interactions, and they do this all with like less than 2 seconds latency. So they get all this video, like thousands of hours of video, and they just lay it up real time. I mean, it really is impressive. And of course, I asked the question, how are you able to do this in front of all the customers? And of course, the answer was, Watson X, how else?
Of course, what else? If you were actually going to dig in, you get a better answer. But you bring up the data points. So they also do the Masters as well, golf. So you have every single shot played from every single position, win position, everything is instrumented. And I said to them, can you use that data for a digital twin or esports, right? Because it makes total sense, or a competitive advantage. They said, oh, it's owned by, in the Masters, it's the Masters case. I'm sure it's the same for the U.S. Tennis Association. But what was also interesting, I found out from one of the sources, customers, maybe this is confidential, but hey, I heard it, so I'm going to say it. Djokovic has his own analytics company. So like what's happening is that the pros are starting their own proprietary analytics system to give them an edge. I mean, it makes total sense. Why wouldn't you grab the data to know that Carlos is actually got a weak spot, right? So like, why wouldn't you? He's like dominating. And same with Sinner too. Those two guys are the best. But Djokovic is going for his the 25th title, Grand Slam title, which would be a record. So he's going to actually kicking off right now as we speak, that match. So if he wins, he'll knock out a number 2 seed. Some are saying he's the best chance to knock out that player, but they don't think he can win.
Who you think? You think so? So Djokovic, he's tied with Margaret Court at 24. So
25.
We saw, right? He's at 24, I think. He'll 25.
He's at 24 now. He'll get 25 if he wins.
But you and I saw Alcaraz play, and I watched Sinner the other night. I mean, I don't know how Djokovic can get to the finals. I mean,
Alcaraz is going to beat Sinner. He was so on fire the match we saw. I mean, he hit every single shot. He didn't really have an unforced error that I saw. Maybe he did, but wasn't really obvious.
Alcaraz, unbelievable. We have a picture. I don't know if you guys can put it up of him serving. It's like a piece of art. I mean, it really is perfection. Really quite remarkable. And to your point about Djokovic, he's how old is he? Like 38. And so he's like Tom Brady. I mean, I can see why he would want his proprietary statistics. And it's just like baseball. I mean, baseball kind of got it all started. There's so many data points in baseball, and the nerds kind of took over, the mathematicians, but it seeped its way into virtually all sports, and including tennis. And the other thing we learned, and I learned this just this year watching, and then Tracy Austin sort of elaborated on it, is the coaches can now actually coach live during the match. That used to not be allowed. And so I think they're not able to use tablets real time. But who knows? They got stuff in their ear and they got text, and they pull a Bill Belichick, a little cheat here and there. Who knows what's going on? I don't like it.
Well,
I'm old school.
a lot of news to get to, so I know we have to cut it short this week. We both got things going on at
Can we come back to Broadcom? I got some quick metrics I
I
want to
want to
share.
get into Broadcom and Nvidia, okay? Because the valuation is, as a precursor to that, Anthropic raised 13 billion at $183 billion valuation, all the language models. So people are still building out. This is going to be a continuing boom for the Broadcoms and the Nvidias because they're the arms dealers in the supply chain. And Nvidia going after the enterprise, Broadcom taking more of an open approach. What's your thoughts on the Broadcom stock earnings beat?
Well, I heard somebody on the Broadcom preview on CNBC the other day. They were talking. It was on, I think it was Fast Money, where they talk about all their trades. And the guy goes, "I don't like Broadcom." He goes, I'm laughing. "I don't like Broadcom. They're commodity." I was like in the office. I laughed out loud. I'm like, "What are you talking about?" And so the guy had no clue. And he goes, "I like TSM. I mean, I like TSM too, but I like Broadcom better. It's a better business. TSM, great business too, but if they get taken over by China and they've got 50% gross margins, it's a really, really hard business." But Broadcom, let me just give you the stats for people who didn't see it. Almost $16 billion in revenue, up 23% in the quarter. That's just the quarter. Operating income at $6 billion, almost 37% of revenue. Their free cash flow was $7 billion, 45% of revenue. That's higher than Microsoft. That's higher than Nvidia. And about almost 60% of their business is semiconductors, 42% in software. Stock's up 10% today. They got a $1.6 trillion valuation. The big news, though, and John, 2 years ago when we were at the Broadcom financial analyst meeting, they released the fact that they had a third large custom chip maker or a chip deal. We knew they had Google. We knew they had Meta. Everybody speculated at that meeting. I remember I was talking to Aaron Rakers about it from Wells. I'm like, it's got to be TikTok, ByteDance. So we kind of concluded that was eventually sort of leaked out that it was ByteDance. Now they announced on their earnings call that a $10 billion custom chip deal. They didn't say it was OpenAI, but everybody knows it's OpenAI. And the thing about Broadcom, the commodity, I'm laughing, they have these long duration, high value, multi-year, multi-billion dollar custom chip deals. Now they have 4 of them. Google, Meta, ByteDance, and now OpenAI. And the humor is, I read an article just before CUBE, Nvidia's stock was off. I think it's off because the market's down. But the premise of the article was it's off because Broadcom is winning all these deals and Nvidia could be in trouble, which is an idiotic premise. But there's plenty of market for both of them.
Well, I think last CUBE, we debated the white box phenomenon for cloud. Remember, Dave? That's looking like it's going to happen again, differently, but the same game.
Well, lay out your premise again, because I'll have that mini debate again.
Well, it means that NVIDIA's moat, which is vertically integrating everything, which is a good strategy for Broadcom, because that's like the Apple versus Android philosophy. The OpenAI deal represents what I call the white box model for the large scale clusters, which is simply there will be a market that will rise up to feed the demand for essentially custom chips that will feed into what could be a clone of NVIDIA, meaning purpose-built systems. In this case, OpenAI got a huge incentive and cash to vertically integrate their own. I interviewed this week a company called Tensor, which makes a robocar, and they use NVIDIA. And it makes sense because if you're vertically integrated inside a closed system like a car, it makes sense. And we've been having this debate, heterogeneous versus homogeneous. I even asked the Broadcom executives on theCUBE last month, and it was interesting because there's a line between interoperability, heterogeneous versus homogeneous, and there's a use case. And we used to have this conversation with Pat Gelsinger a decade ago around what Paul Maritz used to call the hardened top. No one really cares what's in the chip, if it's proprietary, as long as it works. So we're coming back to that. Now, the white box server days, back during the boom of the data center business of IT, Dell, HP, even Supermicro, which is kind of a white box at the time, they were selling essentially servers. So they were expensive. They had quality, all kinds of margin in there for the differentiation. And then it opened up kind of a white box, which is a term for off-the-shelf parts to replicate the functionality of the server. I remember Barracuda Networks used white boxes to put their firewall. Basically, they need a little server. So I think this idea of build your own like vanilla version or of components will happen. I think OpenAI chip speaks to that. So again, very narrow use case, but it means that they will use more off-the-shelf components, in this case, supplied by Broadcom. Now, Nvidia also sells their systems, not so much the chips to enterprises. So, this is something that we're going to watch very carefully. And I think this so-called rumor is true. So OpenAI is set to produce an AI chip with the Broadcom to ship next year and 10 billion in orders that you just mentioned. So, that's phenomenal. Their business performance speaks to that too, which is why they're heavily involved in Open Compute Project, or OCP. The OCP summit is going to happen this fall. We'll see what happens there. It'll be, like I said, many pods ago, that's going to be a show to watch and read the tea leaves. So all eyes will be on the OCP to see who's there, and who's flexing and who's pitching. Because as you said, these supply chain cycles are predictable. You can get a feel for this. Now, co-packaged optics, the hottest area right now in the industry, we saw 2 years ago from Broadcom. Remember the financial analyst meeting we went to? We saw the first version of that, and they were ahead of the curve. So again, the chip guys are way ahead. So if you just walk back and connect the dots from working backwards from the chips, you can start to see the patterns emerging. And that is that the formation of what Nvidia has shown in their performance, just on pure numbers, business performance on their sales, there's no doubt that Jeff Bezos, your margins, my opportunities kicking in. So, Broadcom has got a great business model. They have chips and software. As you know, on the cyclical side, they complement each other. When the chips are down, the software's up. So but in this case, the VMware revenue is so big and the profit's so massive, it's doubled in profit since the acquisition. Cut costs, double prices. Business as private cloud, that's booming. I don't know what their margins were, but I was hearing a rumor that Octane was like, we're making too much money. We're at 93% margin. We got to cut it down. He doesn't want it to be too high. So I don't know what it said on the earnings, but when you're pushing 93% margins, that's a bar, Dave. That's way high. I don't know how you beat that.
I would say to respond to what you just said, it's first of all, it's not just chips, that it's systems, and of course it's software. And I would just say, I would invoke what Matt Baker said to me probably 15 years ago now. It's not a zero-sum game. Is it Android or is it iPhone? Yes, they both win. And so I would say that NVIDIA is on the learning curve, and NVIDIA is ahead of everybody to the extent that you need the latest, greatest. And that could change. That is a risk to NVIDIA if all of a sudden Jevons paradox and all the rules of Moore's law and Metcalfe's law and Wright's law fall apart. Then I would say I would start being concerned about NVIDIA, but I don't think there's any indication of that. They are furthest along on the learning curve, which means they have the most innovation and the lowest cost, not the lowest price, of course. But that's their moat, and I see it continuing for quite some time, unless and until those laws become non-immutable.
And you posted a big post on breaking analysis on NVIDIA, because I don't think it's a zero-sum game. I think they both win big. And even though that I would speculate that the moat is being challenged, yeah, you could say that on paper, but I just don't see it. I think NVIDIA continues to be thundering away. Look at their numbers. They had no sales on their earnings in China. Okay. And they predicted and forecasted 0 sales in next quarter. And they still crushed it. So I think Broadcom and NVIDIA, just rising tide is helping them big time. Like I said, the hyperscalers are still growing and spending. The fundraising climate is massive, and people want to win on performance. So they're going to go both ways.
I did write a breaking analysis last week. I called it Reframing Jensen's Law, Buy More, Make More, and AI Factory Economics. So Jensen's Law is generally accepted as an extension of Moore's Law. In other words, Moore's Law doubling transistor density every 2 years, i.e. doubling performance every 2 years. Jensen's doing it every year. So that's what people have been saying is the new Jensen's law. IEEE Spectrum published this a long time ago, and then the Wall Street Journal picked up on it. I'm reframing Jensen's law as follows: if power is the limiting factor in your data center, or what they call AI factories, and any investment that improves performance per watt and network fabric efficiency is going to increase the monetizable throughput, how much money you can make faster than the total cost that you can put in. So to his bromide, if you spend more, you're going to make more. And as well, there's underneath the bottom line is if you save more, you're going to save more per unit, spend more, save more. And then networking, he said networking's free. You heard him say that many times on the call. I would say networking is, economically break even, if you will, because it pays for itself through utilization gains. If you're running at a 65% utilization and you can bump that up to 80% plus, 80, 85%, well, basically it's true. The network that you just put in and installed is essentially pays for itself instantly. And so those economics, I think in many respects, are more important to understand than the fact that he's just accelerating every year. We understand Moore's law well. The big question I have, John, is does that translate into the enterprise? Because if you can't get those utilization gains and you can't get those efficiency gains and you're not power limited, well then what I'm calling Jensen's new law breaks down. And so what I'm trying to study is to what do we know that's the case in hyperscalers and Meta and XAI. They can't get enough of these GPUs. They're all power constrained. We also know that mainstream data centers are power constrained, but are they getting the same economic benefits as the hyperscalers? People can question that if they want, but they obviously, a lot of smart people believe that this race to AGI is worth it. But will that translate into the enterprise? And the other point about Tensor, robotics. I think it will, but I think it might take on a different dimension. Do you have any thoughts on that?
I do. I think the AI factory positioning is, I've always loved it from day one. I remember that when we were in with Dell on advisory, I'm like, Apex versus AI factory every time. Just got to stop right there. That's winner. Winner, winner, chicken dinner. Of course, Nvidia dropped it on stage and then Michael Dell co-opted it. I think physical AI is going to be an area that is going to hit everyone and culturally bring generations together. I think we're in a generational intersection of old meets new. I was talking with my daughter Jacqueline about this. It's like half the people her age don't even know what a data center is. What is a cloud? A lot of stuff going on has been abstracted away from this next generation. So I think there's going to be a bridge between the two generations. And I think that's going to be the physical and digital worlds connecting, which is why I'm very bullish on DeFi and TradFi, because, DeFi is decentralized infrastructure and TradFi is the trading FI side of it, which is basically front end, back end. So TradeFi is, to me, simply a front end application of decentralized finance. So financial institutions are going to be disrupted, life sciences, med tech, health tech, bio, retail. Tech is everywhere, right? So tech and money is the focus, and I think we're shifting into a generational shift. And I think Nvidia's focus on physical AI is so right on. It's visionary, it's relevant, and it's going to happen, right? So that's why I love digital twins, and I think digital twins will have an application and it'll look different by industry. But creating a digital replica for simulations, for testing, for whatever, that's going to be key. And the question everyone's asking is, what's the winning formula? Who makes money in AI? And I think, clearly with the spend happening, the money making is to have a performance advantage, the best GPUs, the best performance. Those companies that bet on that vector will have to have the best, latest, and greatest. Classic computing. The ones that can't spend the CapEx to get that GPU advantage, in other words, the best, latest, greatest in GPUs or XPUs, they have to have another way to win. And if you can't buy the performance because you're going to be outgunned by somebody, you got to have a data mode. So I think that's going to be mode number 2, data mode. And finally, 3 is going to be the applications on top of those. So there's 3 winning categories that are going to emerge to make money on generative AI. the fastest, greatest, fastest GPUs that can calculate the fastest things and provide results. And the second one is moats, a data moat. I can't buy the horsepower. I got to get a data moat. And three,
And in apps.
clever applications that either create something novel, like a personalization engine or something that's different. And of course, applications will happen in all three of those all those areas. So I think agents fall under the data moat and the app moat, and to some extent, the infrastructure, where there's plumbing discussions around data traversal, graph databases, all those things. So, to me, that's what's jumping out. And I got that question today at lunch at the Capriani Club here in New York, with a big time investor on Wall Street. That's the conversation. What will be the winning areas? Where's the harvest going to come from? And everyone's kind of squinting through to the point where, experts are going on CNBC, don't even know what the fuck Broadcom does.
So you're right. It's picks and shovels, it's data, and it's apps / agentic. You have sort of said, agents are kind of the new sort of software layer.
Well, agents will be a data moat. That's why I love Salesforce. People are down on Salesforce. I think Mark Benioff took some heat this week with his earnings. I think was as a classic, and Sarjeet again wrote another great post on LinkedIn. He's been on fire lately. He wrote a post, and I said a comment which I was getting thousands and thousands of views. My comment was simply, that shows the disconnect between Wall Street and tech, meaning you can squint through the EPS forecast, what was expected, what was forecasted, what's been revised, that's been sandbagged till the cows come home. But the real winners are looking at the product-led growth, and that's just a disconnect, because if you don't know what the products are going to do in this era, you can't connect the dots on the valuations or where the value will be created and then extracted, right? So huge disconnect between Wall Street and, say, Silicon Valley or the tech circles, where this is the 3D, 4D chess game going on, right? So again, smart analysts are going in on the strategy side, looking at the product-led growth. I mean, IBM chuckled when I said that in a meeting this week. They're like, because that's all they talk about is product-led growth, but that's not what the Wall Street analysts are talking about, right? So they're clearly in the game of, EPS as the benchmark for the business performance. And I'm like, yeah, true, but there's an and what's going on with the product. Supply chain goes sideways, you're fucked. If Salesforce doesn't get agents up and running and abstract away the complexity, they're screwed. Benioff knows this. So that's why
I think he
punished for the wrong reasons.
I like what Salesforce is doing. You know that. But to the other point, I mean, George Gilbert's been doing some really good work here. The whole notion, Jamie Dimon and JPMC is Sam Altman's biggest competitor. The point being that it's the proprietary data and the small language models applied to that proprietary data corpus that we wrote about, gosh, in the early days of Gen AI on the CUBE AI Power Law. That is ultimately where money is going to be made. You saw Mongo's results. You saw Snowflake's results. They're starting to show traction. We know ServiceNow is doing well with agentic. Salesforce beat estimates, but the guidance was tepid, and they said agentic, hasn't taken off as fast as they hoped, and they're dealing with some legacy transitions. But people don't understand about Salesforce, in my opinion. By the way, Sarjeet and I disagree on this, but they are doing the engineering work to harmonize the data and build a system of intelligence on top of that, be able to ingest business context from the BI layer, and they're partnering with data platforms like Snowflake, like Databricks. They don't want to own the data platform. That's infrastructure in their minds, and I believe they're doing things that are going to take them in the right direction. And the thing that people don't talk about much or at all, they talk about data gravity. Data has gravity. The on-prem guys always talk about that, but process also has gravity. And agentic is not all about, but it's all about workflows and process. And those processes that process logic lives inside of Salesforce. And so to the extent that they have access to that business logic, that process logic, the metadata associated with that, and they can harmonize that through their data cloud, which is exactly what they're doing, they're, in my opinion, going to be in a very strong position to put forth an entirely new value proposition around software. George calls it services as software. We knew software as service. Oh, let's take email and SaaSify it. Oh, let's take ITSM and SaaSify it. Let's take HCM and SaaSify it. Name it, Coupa. You name a SaaS company. George's premise, which I agree with, is all kinds of new services are going to be formed through agentic that's done through software, but novel services. I liked, by the way, how you said novel. You said Novell, which is a company that nobody's ever heard of, as well. But those are novel services through software that we're going to start to see, and I think Salesforce is going to lead that charge.
Yeah, I would agree with you. And I think that the investor hype was all about the narrative that I think is a false premise, which is somewhat true on one hand, but on the other hand, it doesn't relate to Salesforce. But the general premise in the entrepreneurial community is that, hey, SaaS apps are going to be easy to create. Therefore, incumbents like Salesforce are going to be replicated by agents or, the Replits of the world and Augments and these tools. True. That's a true statement that's possible. Certainly I could build a website with it. I can build an app, but they got data, right? So if you can replicate the service, but you can't replicate the data. I'll give you an example. This came up a decade ago when we were looking at crowd chat. Remember we had a comment, you and I were chatting. I'm like, yeah, Reddit is open source. You know that. You know the Reddit software is open source. We can create a Reddit tomorrow. But where's the user?
I didn't know that. I didn't know that Reddit was open source. I guess now that you mention it, but I hadn't thought about it. What does that mean? It's open source.
It means that we could put a page up and call it Qubit, right?
Qubit.
But it's like, really, come on, Reddit. It's got tons of contribution, tons of data. It's just, you can't replicate. It's inimitable in the sense that it's such a nested architecture, and the content and the data is all there. So yeah, technically we could replicate and create a Reddit, just like I can create software to say, look at this is the new Salesforce, but then you have to figure out how to get distribution, how to get users, how to get the data populated. And again, my criticism of Salesforce over the years is they've kind of had that Cisco strategy, the 90s, buying companies and having stovepipes, your favorite word. So, when you have stovepipes, they're hard to interoperate. But now with Salesforce, now they have the data cloud, they've been working to create an abstraction. This is where I think agents is going to be a tailwind for Salesforce. Agents can abstract away the complexity across the different data sources within Salesforce's kind of estate or portfolio. So everything wins. If they get that right, that is a game changer, and that is a generational step function value creator for Salesforce. If they don't, they could be at the whim of the market, right? So that gives time for the competition, potential competitors to get some viral thing going, simplify the app. But I think Salesforce, looking at Benioff's position, is one, they're doing it. We're covering them. We cover it with George, and you mentioned that few things. We've been there 2 years now. Dreamforce will be there this year. They have the agent effort. Mark Benioff said on CNBC, his free cash flow is booming. Okay, so they got the cash. So, I don't discount their upside at all. I think the investors got this one wrong. If you ask me, I think AI helps Salesforce. Again, they fall into rich get richer category.
Right, and again, they beat. I have a lot of confidence in today's managers that most of them can reasonably forecast their business and hit and be in sandbag enough that they can hit their numbers. And of course, Wall Street adjusts for that. But Salesforce, actually had a decent quarter. Again, their guidance was tepid, and they did say, agentic hasn't taken off as fast as we'd like. But then Benioff rattled off all these customers that are actually doing stuff with agentic. So we're going to dig into that at Dreamforce. First year, by the way, we are on the floor, which is going to be awesome. So super excited about that.
Well, all the executives will come on. We were on last year, but we were at the NYSE office in New York City. This year we'll be on site, as you mentioned. I would be saying, I think their ecosystem play too is going to be big.
That? Say again?
Their ecosystem play is going to be big. If you look at Spring with it, they're going outside their old classic Trailblazers community and building a robust ecosystem. And I think the MCP area where agents can talk to each other will be a big test for Salesforce. If Salesforce turns into a walled garden, they could possibly have a problem. In other words, they have to make their data freely available to program with other agents from other platforms. I don't know how that gets done. I'm gonna have to tap George Gilbert's expertise for that. But if they can harmonize the data within their platform,
Informatica is how. That's their gateway to the rest of the world, isn't it?
Well, yeah, I mean, but MCP is not hardened yet. A lot of people are building their own MCP servers. So it's an area where it's like, it's developing very, very fast. Like, I think it's an opportunity personally. You know, I love that initiative from the community that's been happening. It's a Kubernetes-like moment with in agents, which is, hey, let's get around this MCP, and then Linux Foundation's got a project going. Amazon's Web Services is involved. Also, A2A has got traction. That'll probably be a project in the Linux Foundation. So both of those are going to develop. We'll see which one. I think MCP will be a winner, but they have different capabilities. So we'll see.
What do you make of this Google antitrust ruling? I found it kind of confusing because on the one hand, it's like, okay, Google, you can't do exclusive deals anymore, but you can still do deals, and you get to keep the Apple deal. And Apple, you don't have to change your user experience because that would screw them up. I was like, huh?
It's a slap on the wrist. It's a slap on the wrist.
Big win for Google, right? I mean, Sundar, even Trump said to Sundar, "Yeah, good day for you yesterday. Oh, thank you. You're welcome."
Their head was in the news. Thank Trump for that.
There you go. Lena Khan loses again.
Loses again. You can do a victory dance on that one.
Oh God!
First of all, it's a slap on the wrist. It's a win for Google. However, Wall Street Journal is reporting today the EU has fined Google 2.8 billion euros for abusing its dominance in ads. I said their preliminary stance is to divest parts of its ad tech business. So now here's Europe coming back and doing their thing.
Well, and supposedly the government's going to retry. They're going to appeal. I mean, it's like, come on.
Dave, when I was in Paris, the younger community, they hate how Europe's losing the AI dominance because of all this regulation. And the undercurrent from entrepreneurs and investors is the EU specifically has got its head far up its bottom. And it's so bad. And so if there's really, I mean, there's a public outcry on their over-regulation. So we'll see how that all plays out. Again, that's the EU, the preliminary stance on divestiture, but how much teeth do they really have? So
I heard Jonathan Cantor, I forget what it is. He was like the former assistant attorney general, I think. And he was on TV ripping the decision, the Google antitrust, or the Google decision, the court's decision. And I love how he did what Lena Khan, it's like their talking points. Well, even Bill Gates says if it weren't for, and you actually, I would like to debate you on this. Even Bill Gates says that if it weren't for the U.S. government and DOJ, they would have never missed search. They would have competed. They would have been the next Google. And then the other thing he said, so, there's some, maybe there's some truth
my narrative. Thank you, Bill Gates.
Maybe there's some truth in that. Yeah, of course, Bill Gates says in that because he doesn't want to admit their incompetence, but then in their hubris. But the bigger issue with me was, and Joe Kernan said, well, yeah, if it weren't for the DOJ, we'd still have Ma Bell. I'm like, yeah, and maybe we'd still have Bell Labs. It's the breakup on AT&T. What ultimately did that do? They created a little bunch of baby bells, and then they turned into big, dumb, slow cable companies, and it made the U.S. telecommunications industry less competitive, and we lost Bell Labs, which was one of the greatest research labs ever in the country, and now it's owned by Nokia. So there you go. Thanks, DOJ.
Yeah, thanks, Bill Gates, for supporting my argument, the guy who was in charge of the company.
You really think that's why Microsoft missed cloud, they missed mobile, they missed social, they missed.
Yes, I do.
Yeah, because they were distracted by the DOJ. Really?
Yeah, I think for the 3 years from the DOJ filed in 1997. I'll never forget Janet Reno press conference. It was in my room at the Phoenician in Arizona at a conference, and I watched it. Okay. Microsoft was small then, dude. Like, it was tiny. It was Gates and his lieutenants. They were all there. Small group of people. And again, they were a rocket ship. Okay. A decade and a half into their massive growth since Windows, DOS moved to Windows, and then Windows came out. So they were just ramping up their dominance, their monopoly power. The browser's out, Netscape was out. They were out to kill it. They did do some things. I had evidence personally that I saw firsthand that they were using their monopoly power to write contracts. So Netscape wasn't included with major
I
media.
agree with that. I totally
So
agree with that.
they definitely did that. But the
Yeah,
combination.
but what did the DOJ do? They didn't do shit.
Well, they were in.
This is like, hey, this is like rewriting history. DOJ did nothing.
They
They
were.
were way late on the browser war. And what did they do?
They won the browser war.
Yeah, but they were way late. I mean, yeah, they won the browser war. They should have entered. If the DOJ had entered earlier and not allowed Microsoft to kill Netscape, that would have been interesting. But what was the outcome of the DOJ? It was like nothing. It was
the Microsoft sentiment at that time. I worked with Microsoft. I can tell you, was a combination of bad management, not paying attention. They were distracted. I remember conversations with Microsoft people specifically saying, "We don't want to take a too big of a step." They were gun shy. Okay. Now, also, it was not obvious the whole world missed search. Remember, there was search engines before Google. Alta Vista was number one. Yahoo was basically an index.
Lycos, Yahoo.
Google was the first algorithmic search. Okay. They were the first. Alta Vista was just a clever way of trying to be algorithmic, but quasi, but they lost Alta. The Deck bought them, Deck owned them. They didn't innovate. Yahoo was an index. There was no technology other than data centers. Lycos, they were just portals. They were the only search engine. So everyone kind of missed search. Microsoft had MSN. They had the browser out there with massive market share. They controlled 70% of the web traffic in 2000. Microsoft did. The browser and MSN as a default search engine controlled 70% of the web traffic. I know that because we ran the resolvers for them. Okay, so that's a fact. So they had it. They had the search. Now, management blew it. One, the phone was a complete colossal mess. That was not obvious. They just weren't sharp. So it was a combination of the distraction of the DOJ, 2 to 3 years of depositions. They just would just sleep.
I'm just going to say it again.
Walked in.
I'm going to say it again. Markets and market forces have always been a better adjudicator of competition than the U.S. government. Now, but what China does is different. China just says, sorry, Alibaba, you can't take Ant public, put Jack Ma in a box, and they can actually make decisions quickly. And that's interesting. Did you hear I would recommend people listen to the BG2 pod on China. I had stopped listening to them for a while. I like them. I just got busy. And I saw Sarjeet put it out there and said, this is a must listen. It is a must listen. So Gurley traveled to China, I don't know for how long, and he laid out some pretty interesting, points. And I've always felt and have discussions with a number of people that China's ability to, make decisions quickly is a potential advantage for them. And then maybe you could say what Trump's doing is a potential, counter to that. But it's a really good listen, and it picked up on some of Jensen's themes of 50% of the world's AI researchers are in China, 50% of the U.S. AI researchers are Chinese. But and the other thing he laid out, which I thought was really important point that they made, people think, China doesn't innovate. You remember the show Silicon Valley, of course, where the Chinese kid had his board, the kid I forget his name in the show. What if I could tell you there was an app on the market? Remember that guy? And he had on his board Chinese Twitter, Chinese eBay, Chinese, like he's ripping off all the ideas, and implication being China doesn't innovate, but they certainly do. And the point they made is, you think TikTok's not innovative? They really innovated, and BYD. And so it was a really interesting episode. I learned quite a bit there, and I would encourage people to go check it out.
Well, Dave, the bell is going to ring here any minute now. We should actually close the show out with the bell ringing.
What time is it? Yeah, we never do the CUBE pod at this hour. I'm usually doing breaking analysis.
Yeah.
So, we can't see the options exchange. People don't realize that what happens right before 4 o'clock, right before the bell rings.
Tesla's the only one in the green right now. Everyone's red.
What is Tesla?
Tesla. Yep.
Well, we didn't even talk about that. You saw Elon's pay package that they put forth. Did you see that?
No.
Oh my God. they proposed, the chairman and the board, they proposed a new pay package for Elon that basically could.
1 minute.
If so, let me get this out real quick. If Tesla becomes like a $7 trillion company, he gets a big hunk of dough, and there's tranches as well, but he's got to double the valuation from where it is, whatever, 1.3 to 2+ trillion, and all these other tranches. It looks absurd, but that's why Tesla's up today.
Here.
Yeah, well, this is what happens at 4 o'clock is people go nuts.
They're going nuts here, Dave.
What's that?
They're going nuts on the ground here.
Yeah, I mean,
the bell. All
right before the bell closes, people, the options traders go crazy.
We'll see you later. Let's hear the bell and we'll wrap it up. Thanks everyone for listening. 112 is in the books.